Hello everyone and welcome to today's video. In this video, I am going to be walking through how to convert a pre-money safe using the percent ownership method. In a previous video, I outlined that while there are different types of safes, pre-money safes, post-money safes, discount safes, there are really only two mechanisms that are used at the time a safe converts in terms of its interaction with the new round of financing, in this case, a Series A. When a safe converts, a question that must be answered is, do the shares that were created by the converting safe influence the Series A share count or not? If they influence the Series A share count prior to the Series A, then the Series A round share price will be lower and the Series A investors will own more than if the safe converts alongside the Series A, which is what we are saying happens when we use the pre-money method covered in another video. In the percent ownership method covered here, what you will see is the way that a safe converting before a Series A influences both the share price of the Series A, but also potentially the share price of the safe in the event that a company raises capital at a valuation below the cap established for the safe. So with that, we can get started on the video. So the first thing I'm doing here is teeing up the format for the tab I will be working in and dropping in the information from my financing scenario tab. So as you can see, and I'll copy it in, the safe we are using here is $1.5 million invested with a pre-money valuation cap of 15 million. And then the Series A causing the safe to convert will be 8 million invested on a pre-money valuation of 24 million. So the first thing we're going to do is walk through the safe converting, and the first step there is to establish the pre-money valuation at conversion. This is similar to the pre-money method where we just take the Series A pre-money valuation and the pre-money valuation cap for the safe and use the lesser of these two numbers. In this case, it'll be the 15 million. The next thing that we're going to do is calculate what the share price would be for the converting safes if we use the pre-money valuation based on the cap here. So we're going to take the pre-money valuation at conversion, row 25, as the numerator, and the denominator will be the pre-financing share count of 4 million shares. The next thing that I will do that is unique to the percent ownership method is I'm going to take this share price, if we use the cap, and compare it to the Series A round share price. And I'm going to be using the lower of these two numbers for the safe converting. Now, when the valuation for the Series A is above the safe cap, this is a bit of an extra step that doesn't yield anything. That said, when a safe is converting below the cap, this calculation becomes incredibly important. So now that we have the share price used at conversion, and I'll link in the Series A once I calculate it, my share price used at conversion, my safe investment, and I'm going to again round my share calculations. I know we are going to acquire 400,000 shares. Now we're going to go to the Series A, and we will see one of the areas where a Series A under the percent ownership method is different than a Series A under the pre-money method. Using the percent ownership method, we are including the converted safe in the pre-Series A share count. So the common stock of 4 million in addition to the shares acquired by the safes of 400,000. That is our pre-Series A share count, which will be part of determining the round share price. Now we're going to take the Series A pre-money divided by the pre-Series A share count. And as we see, this share price is well above the share price for the converting safes because the valuation of the Series A is above the cap. That said, we are still going to take the time and link this share price back into our safe conversion calculation, because in a situation where the valuation at the Series A is below the cap, this model will function a little bit differently. So I want to build that flexibility in now. Now that we have the Series A round share price, we can calculate the number of shares that Series A acquires by taking the Series A investment divided by the Series A round share price. And from here, we can now build out our post-money ownership section of the model. One thing to keep in mind here is, because we're looping in the Series A round share price into the portion of the model related to the safe conversion, there's a little bit of circular logic happening here. So you'll need to make sure that you turn on iterative calculations if you're trying to replicate this in your own instance of Excel. To turn on iterative calculations, you can go to File and Options, and then there should be the ability to select a box that lets you do this. If you Google turning on iterative calculations in Excel, you'll be able to find very helpful links immediately. So now we're going to link in our converted safe, our Series A, and our common stock. And that will give us the total post-money share count of 5.9 million shares. Now we also have our post-money ownership, which we're going to take with the common, converted, safe, and Series A. One thing to keep in mind here is, because we're using the percent ownership method, the Series A is actually going to get the 25% ownership that you would expect them to get when you have a pre-money of 24 million and a raise of 8 million. When we did this in the pre-money method shown in a previous video, the ownership we got was actually lower than the expected amount. So with that in mind, the percent ownership method is more favorable to the investors, because it is the situation where those investors are able to get the ownership that they would expect. The safes would rather have the pre-money method, as that allows them to maintain a slightly higher amount of ownership. Now, I've shown up till this point how this math works in the event that the pre-money valuation for the Series A is above the cap. But now we're going to do it where the pre-money valuation for the Series A is below the cap. And I'm going to cut the Series A investment and Series A pre-money in half. So I've cut the investment from 8 million to 4, and I'm going to cut the pre-money valuation from 24 million to 12. What you'll see here is this leads to a conversion share price based on the original math, where we use either the lower of the valuation cap or the Series A pre-money of $3 a share. That said, the Series A's actual round share price is lower at $2.62.5. This is because of that circular math. The safe influences the share price for the A, which influences the shares that everyone is acquiring. So it's a little bit circular in nature, which is why I'm linking the Series A round share price back in. But now, because of this, my model will continue to flow correctly. I see now that my safe is acquiring 570,000 shares. The Series A round share price is 2.625, and the ownership for the Series A has remained the same. At that 25%, it should always be, whether it's above or below the cap, when we use the percent ownership method. This is all part of the different topics that I offer with my practice problems available online. If you want to practice these types of scenarios and more complex scenarios as well with step-by-step answers and the types of questions you would be keeping in mind, please go to my course's website linked below and take a look at the practice problems for sale there. Thank you and have a wonderful day.